Hello, everyone, and welcome back to the Financial Fox special edition of Smart Investing with our gurus, Zach and Clem. Clem is joining in a minute, so we have got Zach here. And how are you doing?
Well, it's the first time in weeks. I think I've been able to attend it from the beginning, and hopefully we'll survive till the end.
Yeah.
I've been very busy, so I'm very pleased there's an extra holiday today.
Yeah, I know. It looks like everybody's still busy, even though it's a bank holiday. I don't know. Maybe such a short week for businesses. It doesn't really work. I mean, you still have to get ready for Monday because everybody's not going to do anything on Wednesday. So, there is a bit of kind of like tension. But anyways, bank holidays, the Jubilee bank holidays. So we should be all happy, right?
Well, any excuse for a celebration, we've got one. So hopefully keep going with the celebration mood over the next, a few weeks, I suppose, as well.
Yeah, well, I think celebration is good, especially when people are relaxed, are happy, they are no stress, So I know at the moment it's a little bit tense with the overall economy and the interest rate and everything. But listen, do you think the Fed is going to stop increasing the interest rate? Because this is one of the questions that everybody is asking. And, maybe we can see as a result a lift in the stock market.
Well, I think that it's probably the stock market is not falling enough for the Fed not to continue raising interest rates. But if it became bad, then I think that they might. The other point here is that we've already had quite a wind down, obviously, in the tech stocks and many other areas. So, you'd hope we're sort of nearer the end of the cycle of raising than we might, they could get it done by, the end of the year or by the autumn or something like that. So maybe there's a glimmer just in terms of what they were trying to do. That would also stop them raising rates anymore. But it's if they were raising rates here to sort of 4, 5, or 6%, or whatever it's near to inflation, I think there'll be chaos. So the strategy of raising rates, I think, is a very dangerous and difficult one, especially if they go too far.
Yeah, I mean, it's harming the economy a lot. It's harming the middle class. Is maybe not harming so much the rich people, but I think when you start to go down the ladder, whatever, it's not nice to say that because we don't want to be classy, but it's important to kind of realize who are the victims mainly of this, which is the majority of the population, the one that should be helped, that should be empowered, that should be looked after. And is a bit kind of like not an easy one. But 2023, do you see this being a positive here? I mean, this year it looks like we are in the middle of something happening, and maybe it's not so positive. But how do you see the things planning for the future?
Well, I think there would have to be a resolution to the Ukraine situation. I don't think we can get, we've been in a weird environment for the last 2 years with the pandemic first and then Ukraine. I don't think we can get into any sort of happier situation for the economy until Ukraine is settled one way or the other, because obviously it really disrupts the whole way, the agriculture and supply chains and everything else. So I think that's a big influence, and I think that, I mean, in a way, it could be a lot worse than it is so far. So I think we're lucky that hasn't affected things as badly. But obviously, has created inflation, and that is or could still be a real problem.
Yeah, Clem, nice to see you. We were just talking about, where we are going next. Is the Fed going to stop raising interest rate? Is 2023 going to be more a depressive year than 2022? Do you want maybe to share your prediction?
Well, I mean, I think the process of bringing inflation is already underway. But the question you have to ask is what is the real target for inflation? And what is the real level of inflation? I mean, the real level of inflation is what, 15%, something like that. And if you actually look at where inflation should go, it's not 2%, it's going to be 7%. So there's a fair way that inflation will have to fall, and there's a fair amount of momentum, and it's going to have to go over like that. So that's going to take a year, 18 months. But the roof is already coming in. I mean, lots of people all these unicorns are being slain right now, and all these young bucks with their wonderful startups are all having to lay people off and are all getting shut down, and all their VC money is drying up. So the tide has reached last autumn its maximum output. It's come in that far. Now the tide's going out. And the question is, how far does the tide going out? Now, Zach will say it's going to be Armageddon and we're all going to die. But I think it's not actually going to be that. I think it's going to be rough for a period of 2 or 3 years, and that's it.
Okay, rough. Yeah. Okay, fine. And that also means that crypto is going to be rough, and we have to wait 2020.
Well, not necessarily. I mean, yes, with the money flow coming out, that's going to hurt it. And crypto is going to crash, and it has crashed and will continue to crash. But when it reaches its low, it will be the low. You see, when things crash, I mean, people always get crashes wrong. They say, imagine that some guy a stockbroker, he's going to jump out the window, right? He jumps out the window, and then he hits the pavement. People say, he hit the pavement. An accident has just happened. No, it happened when they went out the window. And all that fall, he was perfectly fine, maybe, to everyone else's mind. Maybe his own. Maybe he thought he was going to fly, he could flap his arms hard enough. But when you hit the pavement, that is not when it happened. It's when you went out the window, right? We're now, with crypto has crashed. But the point is, when you actually get to the bottom, when everybody's suffering, will continue to suffer for quite a long time.
Yeah,
that's the time when you want to buy.
Yeah,
when everybody else is destroyed, and everybody else is crying, and everybody sees 3 hard years ahead, which there will undoubtedly be, that's the time when you want to be buying, not when it's all sorted out.
Yeah. Okay. Yeah. So basically waiting for the opportunity, which is what we said many times into this show. How about today we don't do something more fun, like it's the Jubilee weekend. We want to make it a light show. Do we maybe want to share some stories, some memories about investing or trading that could be an example or could be valuable for our listeners? And it's just a way kind of to share experience, maybe for people to avoid doing the same mistakes or, to kind of wise up. I thought it was something cool to do.
A story about, go on, Zach, you must have many.
I may have, but I'm not quite sure I can remember any at the moment. But no,
it could be in yours, or could be somebody else. Anything that you think is memorable.
Oh no, I think the only thing which, well, in my experience was memorable was the arrival of the PC in the 90s, and getting into charting with that when it was you're going from paper charts to seeing stuff on screen, and you could put moving averages on there, and you can have little buy and sell signals on there, and that really was a time when it's just like a turning point in history. And I suppose all the things we take for granted now, if I remember when I first saw them, the ADVFNs and as I said, the charting and all that stuff, it was an incredible thing for investors and for the stock market and everything else. So it's always, I think, if we're sort of looking back over the Jubilee period, that's nearly half of it, 30 years or so. And I think that was a real influence on the way, I look at the world, and also I look at the markets.
Okay.
That's my funny story. That's my funny story.
But I suppose my story is that it was one of the stock market is a puzzle, and it's a puzzle with nested puzzles and lots of puzzles. It's a big machine mysterious machine, which is all linked together in a way that's hard to understand. And the more you understand how it all links together, the more likely you are to make some money. And one of the things that took me a long time to understand, well, actually not a long time, but it was like, and what people even to this day will say, I'm absolutely insane to say, no, it doesn't work like that, is that in small caps, particularly, well, not particularly, with market maker stocks, buyers make the price go down and sellers make the price go up, which is completely the wrong way around, right? More buyers, price goes up. Yeah, more buyers than sellers, price goes up. More sellers than buyers, price goes down. That's classic economics. But that's only when you got buyers and sellers. But if you've got someone in the middle, it's not a seesaw. It's all of a sudden it's a wobbly bridge. And if you're the market maker and someone comes on and says, you don't want any stock, you're just making a market. You don't want any stock of that share. So someone comes in and says, I want 10 grand. He might say, well, that'll cost you a bit more. Oh, here they are. But he's now short. So which way is the market going? Because the market maker, the man that controls the market, is now short. If the price goes up, he loses money. And if the price goes up, everybody says, oh, the price has gone up of the share. Oh, I better buy some, it's going up. And then it goes up more and he gets more short. And then there's a panic and everyone piles into it. Now he's infinitely short. And now he's bust. So what happens is when he goes short, the price goes down. Because he controls the market, he pushes the price down. What happens when the price goes down? People go, oh, no, I'm losing money. Oh, no, run away. And they sell. And he's not short anymore. So that is the game in market maker stocks. When the market maker goes short, price goes down. When the market maker goes long, I go out and I go, have 100 grand's worth of this stock. He says, oh, I'm going to give you a bad price for that. Gives you a bad price. And then suddenly the price goes up. Why? Because he's got shares to sell, hasn't he? And when he goes, oh, look, the price has gone up. Everyone goes, oh, the price is going up. The price is going up. I've got to buy. So they buy the shares off him and he makes a ton of money. And you might say, well, that's share manipulation. Well, market makers have the permission, and it's in the rule book, that they can manipulate the market, because that is what market making is. But they're official market makers and official market manipulators. And they do so for the good of the market and its liquidity.
How do you
understand that the rules are upside down? Then you'll find out that it makes a lot more sense than that currently.
How do you take advantages or you can get on the same boat with those?
That's wrong thinking. That's wrong thinking. How can I take advantage? Or how can I be a market manipulator too? No. How can you be
what
a good
a wrong
investor?
question, Graham.
Yeah. How can you make money too? Well, first of all, you look at the spread and you find it's 25%. And if the average return on the market is 7%, that's 4 years worth of average market return you just spent getting into that stock. So you don't play that game. And when it's 5%, it's still a year. And you've got to sell us another 5%. So there's 10% you're losing. Why would you play that game? Yeah. You've got to understand the costs. You've got to understand what makes a good share and a bad share. You've got to buy and invest. And you've got to leave the gamblers to gamble. And you've got to leave the market makers to strip them of their money.
Yeah, exactly. What we always said. Is there any, well, I've got a question from one of our viewers. Jonas Miller, what company are most likely to gain from the Jubilee celebrations? Is there something?
Zach,
this is your field. This short-term speculation.
I suppose it's probably the supermarkets and the hospitality trade as well. So everybody's got the barbecue out and all that sort of stuff. So. Maybe when people are out and about, they do a bit of DIY as well, or get some DIY stuff. But I don't think there's ever really been a, it's normally like you get the results 3 or 4 weeks later or a bit later, and by that time it's not normally going to be a meaningful thing that you can. I don't know. I'm trying to think of a stock which is, say it's Kingfisher or something like that. The shares might be £3.20. Well, if they have a positive update on their sales over the Jubilee holidays, you might get a couple of pence out of it. I don't think it's going to make a big difference to that, but it's a nice question anyway.
I mean, yes, it's a very interesting question. The answer is it's just noise.
Yeah.
And noise trading is very short term. It's a funny old game, that one. and you might be right. Well, you probably will be right half the time and wrong half the time, and minus your costs, which hopefully are low, it's a negative sum game. So, and when you think about the scale of things that have to happen to move the market, that provide a shock, because this bank holiday has been on the cards for years. So the market should be able to price all that stuff in if it was worth pricing in. Yeah. So it's already priced in. And so there's going to be no real action unless something unexpected happens. Like, I don't know what, everybody goes out and buy Marks and Spencer's shares on Monday. Yeah. But, it's the market is a pricing engine. It's very, very good. Even in areas as dysfunctional as small caps and as dysfunctional as COVID and dysfunctional as central bank intervention, it's still a pretty powerful pricing engine. And that kind of, it's like when you read an article in the FT about something happening in some market or other, it already happened, and there's nothing to be done now. It's the same with this sort of question.
Can we maybe broaden the Jonas' question to kind of like, we are in the summer right now, so we understand we have kind of not such a positive or great economic.
Then it may go away.
Backdrop. So I was just going to ask, is there anything that in the summer usually tend to outperform, or could be, everybody is going to start to get out again, is going to go, more people on holiday.
The classic is sell in May, go away, don't come back to St. Ledger Day, which is September the 15th.
Okay, fine.
So that's the classic, because everyone's going to go on holiday, and therefore nobody's particularly interested. Volumes drop, buying pressure drops, average selling pricing continues, and so on and so forth. So it's normally meant to be a bearish period, apart from when something happens out of the blue that makes it a bullish one. Or for example, like if you get a massive crash in April, probably the summer would be quite good because it'll be slowly coming back from that crash. But generally, in a flat market, they say selling may go away because everyone takes a holiday. Now, in America, they don't take holidays like that. So you wouldn't think that has that effect anymore. But there does seem to be a little tail of sell in May that is still around. But, this year, we've got these massive seismic moves going on. And the fact that people are going on holiday, they've been on holiday for 2 years after, is who knows what that's going to do.
It was staycation, Clem. It was not holiday. It was staycation.
No, I meant working from home.
Yeah. Yeah, exactly. With lots of stress as well, because, you have got other things that before, because you were working, you didn't have to cope with, and then you have to, there were a lot of divorces also happening during COVID.
Yeah, well, I can't comment on that. I'm still married.
Okay, so basically summer is not really going to be the place where the
summer lull, but it's going to be a spectacular summer, but not necessarily in a good way, because you just have to look at crypto is on the edge of that last leg down that I've been talking like a broken record about for a long time, and here we are, we're finally approaching that moment. And I wrote an article that said, hey, it's right on the cliff edge here for that move down below 20,000. And then what do you know? Next day it goes up 3,000, but it's snapped right back down again. Yeah. So it is really, really on that edge, and it's going to go off it because, as I said, a lot of people all over the place are finding it very, very difficult now because the support that was pushed into the market because of COVID, well, they've had to stop pushing it in, and the plane, which was maybe doing that before COVID, did that, and they pushed it like that, and it's basically a stall. The whole economy is in a stall, and in stagflation stall, and they can't keep putting the money in because that's only going to make inflation get worse.
And also, Clem, you were, I mean, many times we were talking about crypto and you were telling me like every year there is kind of like a new piece of the puzzle that is going to be added, whether it was DeFi, summer 2020, then there was the NFT just straight after. Now there would be, then there was the metaverses. Then there is always another piece of the puzzle that is added. And you know, the other day, I was talking to you about this southbound tokens, and we didn't have the opportunity to talk, but I would.
Well, I mean, I think it was a very interesting idea, but it sounds totally fascist, and it sounds totally like social credit that the Chinese have put.
Yeah.
And you know, people are not going to want to give away their privacy, which is what it amounts to, i.e., have everybody, you know, hot or not in crypto land, or nice or nasty, or in crypto land, and all the people that are all the nasty people will abuse it and go around and start blackmailing you into paying them to not trash your reputation and stuff like that. It's just, oh no.
I don't really understand how they could came from Vitalik. I mean, if you are in crypto, you are kind of thinking about decentralization and not thinking about centralized control, you know, risks. So I don't
think Karl Marx the plan for, you know, 40 million Russians to die in gulags either. You know, he's a thinker, isn't he? He's a great techno architect and thinker, but it doesn't mean that you come up with a great idea.
Yeah. So you don't think them taking off?
Terrible things, right?
So you don't think they are going to take off?
Well, it might take off just because they are toxic. Yeah, I mean, so social credit, like the Chinese do it. Yeah. I mean, it started out as a money thing, as a credit score, and before you know it, it's whether you have your hair cut in the right way. You know, you remember places like Singapore, they would actually arrest you and cut your hair if you showed up with long hair at the airport, and if you chewed chewing gum, they would bust you for it. Yeah, and you know, the world is still. The sort of freedoms that we enjoy in Europe and in North America, unheard of in lots of other places in the world. Actually, they have freedom because they have anarchy, but you cross the government in the wrong way and you're toast. And you know, social credit, it's Orwell on steroids, isn't it?
Yeah. I mean, you
build up your reputation. Well, who do you let build up your reputation?
Exactly, and somebody can take it off anytime. Exactly.
I have an army of 17,000 robot authority ruiners. You know, be nice to me. I'll onslaught you and make your reputation dirt. I'll tell you, talking of that, the amount of black PR that there is out there, the amount of negative PR outfits that are out attacking competitors, I guess, or well, competitors for sure, and that say, oh, you know, baked beans are bad for you. Where did that come from? Well, it came from a company that sells spaghetti that has paid a PR company to say baked beans are bad for you.
Yeah,
and there's a huge amount of that out there right now. People need to look out for it. When there's a hit piece, a bad story on somebody, that's been paid for.
Yeah, I think I kind of agree, and I think more people should actually realize on who is building this narrative, who is building the storytelling that all this news or this information that we are fed with. There is somebody that is building a storytelling, like a way of thinking, and sometimes not everybody realizes that. And
it's a pestilence. It's an absolute pestilence. A negative PR is something a lot of people don't understand what that is, or even know that it exists. Because if I'm a competitor of another company and I have no ethics, I look like quite lots of companies, they pay someone to trash the reputation of somebody else. Oh, you know, XYZ's handbags give you cancer.
Yeah.
In the same way as if you look at aspirins, aspirins are good for the heart, they're good for the arm, they're good for the eyes, good for the nose. Every 6 months out comes a story that a clinical study says that aspirins, you know, make you live longer and do better. And there's the dark side of that, of people that spend money to trash somebody else. You can guarantee all these anti-vax stories were paid by people, say, in other countries that had their own vax. trashing the vaccines in America because they had their own vaccine, whatever country they had their vaccine, whether it be Russia or whether it be China, for example. And they were paying people to trash the Western vaccines so that their people wouldn't demand that they bought them. That kind of thing. Yeah. It's a pestilence and it's a virulent evil.
Is there any black PR on the investing trade?
Well, yeah, short and distort. Short and distort. There's even been inquiries into short and distort. I.e., a hedge fund who's short a company will go. I mean, certainly Tesla's been attacked massively by black PR, and from all the shorters. They got billions of pounds short Tesla, and they go to the end of the earth. Oh, a Tesla caught fire in Oakland. How does that get in the newspapers? Oh, another one. 6 weeks later, caught fire in Texas. Oh, there it is. Videos of it as well, and all over all the blogs. That's all black PR from shorters in stocks.
Well, definitely there is a black PR on crypto right now because everybody.
Yeah, I mean, like one exchange will attack another exchange.
Yeah.
It's like everywhere. It's an internecine warfare. It's a negative sum game of the worst sort. And it's bad for everybody. And it's done by people who are basically wicked. But there's plenty of them out there, particularly in crypto.
Come on, Zach, jump in. I know you have got a lot to say about black PR.
The thing on the crypto is that it was obviously the financial establishment didn't want it to work. They still don't want it to work. So it's very easy to knock that market. It's also very easy to knock it because there's no individual that you're really attacking or an individual company. I think it's most easy to knock a stock or a listed company. So it's all there, and I think that's been going on for years now. I mean, for at least 5 years of very negative coverage about the crypto area, and I don't actually see it's much different. It's basically, for me, they're just basically like unregulated stocks rather than anything else. But it's become if it succeeded, if Bitcoin now went back up to 100,000, and everybody was happy again about that. I think that the crypto world really would be a threat to the banking system and all the other stuff. So it's probably just as well now that
it's just going to get embraced. It will be embraced. I mean, it wouldn't take many laws to make it the right shape for government. It's just a technology.
Yeah, exactly. And there are so many payments company right now. They actually integrate payment solution where you can pay with different kind of assets. So, when you have just to tap, you can just choose the assets you want to pay. And that's
banks are the financial military, right? The banks are the financial military for the government. That's their job. They are conduits of which money flows through and economic policy is executed. Yeah. Crypto is just a tool. Yeah, it's just an item. The anarchist dream of unfettered, uncontrolled, untraceable, etc., is just as much nonsense as any extreme anarchist point of view. Yeah, and centralize everything is just as much as a fantasy as totalitarian Russia. Somewhere between the two is the perfect balance for humanity in society and all those people, and no one's happy with it. Because it's not ideal for anybody. Yeah. And, the anarchists are actually the libertarians. Zach is on the spectrum towards the anarchists point. And I'm probably quite a long way towards the libertarian point of view as well, probably not as much as Zach. And, the totalitarians are at the other end. And, that is the current debate. That's where the political struggle is. It moved on. 120 years ago, the political struggle was between the Republicans and the monarchists. Well, they're all gone now. Yeah, and what we've replaced it with is the socialists versus the not socialists. Well, we're all socialists now, right? So where's the argument? Well, the argument is the totalitarians. Everybody should be controlled. The dustbin should have chips. You shouldn't have your Hoover on between 12 o'clock and 3 in the afternoon. Singapore, all that stuff. China, yeah, totalitarianism. We've got lots and lots of rules, and you stick to them, and it will be great for everybody. And you've got the anarchists and the libertarians who say, "Get out of my face, leave me alone. Stop taking all my money, leave me alone." Yeah, and both ends don't work. Somewhere in the middle is where it works, and that is the struggle that we have now. And before I'm gone, I suppose there'll be a completely different political divide, and it will be about something else I won't even understand. But right now, that the argument between more rules, more red tape, more do what we tell you is between that and the people that say, get out of my face, leave me alone, give me my freedom, let me say what I want. And there we have it. And money is going to be somewhere between the two sides, and crypto is a tool for that. I almost forgot my point there. And crypto is just a tool, and it will be used by both sides for their purposes. And it's the future of money because it's better money. It's cheaper money. That's the thing you have to realize. It's cheaper than
and faster.
Trillions of dollars of paper bills and having 250,000 bank shops. That's how many branches there are in the world. Oh, was it 2.5 million? Oh, you can Google it. It's a huge number. The carbon dioxide pumped out by banking is immense. But anyway, it's a more cheap way of running finance. And that's why it's going to go that way, not for any other reason.
So just let's just wrap it up with some kind of food for thoughts, because it's going to be a long weekend. Monday, everybody's going to come back. People need to feel re-energized and more positive. Maybe it's a way that people can preserve their capital and perhaps take advantage of some opportunities. What would you say, Zach? Maybe on those lines, anything you want to share? Any kind of like upbeating thoughts?
Well, I think the one that I was thinking of, and I always look at the FTSE. That's my sort of favorite thing to look at. It's near the top of its range. It would be. I mean, most people would expect it to fail here around 7,600 or whatever it is, or wherever it closed yesterday. It's been in a range between 7,000 and 7,600. It'd be amazing and wonderful if it actually broke to the upside. I think that's probably something that nobody's expecting at all. But a break to 8,000, I think, would be a great boost for the sort of the whole stock market fraternity, because I think they've been hit quite hard in terms of the liquidity, especially in small caps. So maybe that would be a driver. I'm not quite sure what would take the FTSE up to 8,000 and a record high, but who knows? Maybe it's Russia, Ukraine, or maybe it's actually the effect of inflation. Maybe there's something positive. Maybe it actually has a positive effect on profits, because at the time, I think what you can see now is that there's massive profiteering across all sectors. Their costs go up 10% or 15%. They pass on 30%, and they're getting away with it.
There's a multiplier effect on all these things. So when your price at the bottom of your price pyramid goes up 1%, the price at the top goes up 3 times, because you've got all the middlemen, you've got all the chain that has a markup. But profits go up. They're not real profits. I mean, they are real, that in paper, but your turnover goes up by inflation. You should do anyway. So it's gone up 15%. Your profits go up by 15%, but the purchasing power of that 15% is just the same as it was last year. So the numerical value of the FTSE goes up by 15% because all the numbers have gone up by 15%, but it's not actually wealth. Now, what probably happens is the FTSE goes up 8%, inflation goes up 15%. So actually you're losing. So the wealth of the FTSE has gone down by the gap between 8 and 15%, which is quite a lot, 7%. So the wealth of the FTSE, the buying power of the money that the FTSE represents, has gone down 7%. And you got 7% poorer, but the number's gone up 8%, if you follow that logic. And that's what inflation does, because everyone's a millionaire. But unfortunately, a pint of beer costs 2 million. But my point, what people should think about, is this: in hard times, the passive take real pain and the active do real well. So what do you want to be, passive or active? If you want to be passive, you want to sit on your sofa and watch afternoon television, it's going to be a hard world. Maybe not that hard, maybe your sofa's soft. But if you're active, you'll do quite well, because there'll be plenty of room for you, right? Because the noise dies down, the froth, the money that is being wasted, the kids that won't take a job because their parents are paying them the money that they don't have anymore because their stock portfolio fell down. They have to get a job. They have to actually do some work, and things get real. And when things get real, the active, the hardworking, the grafters, you don't have to be bright, you don't have to be talented, you just have to graft. They will do really well in comparison with the people that are not grafters. I was in London a few weeks ago, and I saw some poor guy with a Deliveroo on his back on a bicycle riding through central London. And I turned to my cab driver and I said, that is the future of Great Britain. People that are prepared to do that to make a little money. That grafter He's and his kind are the future of this country, and they will achieve and they will prosper and they will do very, very well, whether they come from the darkest, most deprived area or whether they come with a silver spoon in whatever office it came in. Those grafters will do really, really well. And it's coming that it's going to be the time for the grafters to clear the path.
Yeah.
And those that are not prepared to graft aren't, just are passive. They are going to fall back and fall away and leave some room for the grafters to get on with it. And that's going to be great.
Yeah, I think you said exactly something very important. Sometimes it's not just always thinking that we need to do something now. Sometimes is more about planning and strategizing and see the opportunity as it comes, but also planning for that. So I think
just chop logs, just do something, just crank the handle, just do work, just do something. And most people do not. They just wally around. They go around and nappa. You walk down the streets, there's the Instagram zombies, right? Non-player characters. You can't say that without getting cut off on Twitter these days. That is not the future success of any country. It's the guys on the Deliveroo delivering your pizza. Give them a $5 tip. They're the guys and the girls that are going to make the wealth that the country needs to support all the people who are doing that. I think it's that, isn't it? That's Twitter. That's Tinder, isn't it? Anyway, so, do something. Get going. If you're not already going, if you're already going, keep going. Your time has come, right? Because all the froth and the garbage and the waste and the I can't find a not very rude word for those sort of people are going to fall away because there's no hot air to support them.
Yeah, I agree. It's getting out there, getting active, and keep.
Well, look at all three of us. You're an incredible grafter. And Zach, he's an incredible grafter too.
I agree, Zach. I mean, you listed a company. That's a massive achievement in a bear market.
In the beginning of in a bear market. Yeah.
Exactly, and you have it. So that will unlock lots of opportunity. I do agree. I do agree with Clem on that. It's not an easy thing to list a company, and you did it. And I mean, it's great.
Let me give you an example, and this is one of my favorite examples. It's a bit of a joke, but there's a place in every town where all the condensed wisdom of all the world's greatest men is hidden. Nobody in that town really knows where it is, has even heard of it, and let alone they never go to it. It's a secret place in reality. But you can just go there and you can find the wisdom of the world's greatest businessmen, the world's greatest philosophers, the world's greatest scientists, the world's greatest everything. And you know what? Nobody goes. And you know what it's called? It's called a library.
Yeah.
And you go to your local library, it'd be empty. Nobody would be there. Yeah. And there it all sits. The wisdom of the tactics of Julius Caesar, the wisdom of Plato. And nobody goes. Right? Well, some people go. And it's the same in life. Some people grab the opportunities, most people don't. And when times are hard and when times are gritty, that's when you get the opportunity. So opportunity knocks. In the same way, you'll get the opportunity to buy at the low of the market in crypto very, very shortly, I believe. And sometime in a similar, well, probably a little bit longer, there'll be a bottom in the global equity markets. And there will be a wailing and a gnashing of teeth. And hopefully you'll be going, buy. I'll have some of that. Oh, it's the end of the world. I'll have your shares. Yeah, have some growth. Oh, you don't want your Bitcoin anymore. It's all dead, is it? Oh, let me give you some dollars for that. Yeah, and there'll all be for the next 2 years after that. You'll hear nothing but crying and sobbing and complaining and blaming, and it'll all be going up.
So basically, don't be shy, don't be arrogant. Just keep moving.
Well, you could be arrogant. You might be better than other people. Definitely don't be shy.
Yeah, don't be shy. Okay, but arrogant is never going to be the right attitude to work with other people.
No, arrogance is what other people have.
Yeah, it's not good because then
other people are arrogant because they think they're better than you, but some of the time they are.
Yeah.
And actually, being humble is maybe probably better advice.
Yeah, I kind of agree on that. Okay, Zach, do you have any final notes you want to leave us with?
No, I'm staying humble. I'm staying quiet. I think you covered everything that I could possibly want to hear this week. Okay,
well, thank you so much, both of you, for coming on the Jubilee weekend. And
before you cut us off, Zach, you need to speak to me.
Okay. I need to speak to you.
Not now. Yeah, you need to speak to me. We need to do some deals.
No, we do. All right. Very good.
Okay. Thank you, everyone, for watching. And thank you, Zach and Clem, for being on. Have a fantastic Jubilee weekend.